Hello, everybody. This is Jason from Levelhead Trading, going into my technical analysis on Tesla and where we stand today. Today, the stock market's closed, so there's no action. But looking back at last week and the daily charts and the weekly charts, pretty much is all that I'm going to be focused on from here on out, probably. So first off, going into the first level of retracement is the 382. So here's my Fibonacci retracement scale, I guess you could call it. And so where that would line up is approximately $209. And that would get you back to this area here, which in the previous videos I had made, I was talking about this little structure right here. If Tesla could hold and not break below this particular area here. So we did break below it, landed right smack on the trend line on the weekly chart, which was down here at 175.01. And so now we're trying to work our way back up. And this includes confirming a daily trend change. So here is the last, here's the higher low, and then you complete the trend change by breaking over these levels right here, which was 192, 196, and then clearly being able to finish above those. That doesn't mean we couldn't possibly come down a few percentage. I mean, anything's possible, but so this low here to me is kind of a key level to hold in the future here, 182, 182.11, because that's the most that you had pulled back from this move, right? You dropped from 175, moved up to here, and this is where you finally set your daily higher low, 182.11, and then you broke over these, confirming the daily trend change. So to me, you got to kind of hold that price right there at 182.11. So where we're heading now, we might have a day or two potentially going down a few percent, but that would be fine. That would kind of create a daily bull flag on the shorter time frame here. If we trade sideways, maybe coming down slightly, holding a level somewhere around here, and then eventually pushing above and making a higher high and getting up into this first area of resistance. Really, this is the first area of resistance, is getting over these levels, which the high of this was 217, and then before that was 215.65. So this is the first level test that you're looking for to try to get over. Because if you can get over this area here, then this line right here is the 38.2 retracement from the high, not the all-time high, but from the most recent high over here of 265, approximately 265. Yeah, 265.13. So if we get up to here around 209, then that'll be a 38.2 retracement. And what you want to do is get past that. You want to get a decent amount past that to not look like a weekly bear flag. Because if you can't get through this, then you're not going any higher. So on the weekly chart, this is how it looks on the weekly chart. And again, I still have the retracement, Fibonacci retracement guide here. So again, here's where it looks. That would be the 38.2 retracement. This is how the week finished. So that's good. You finished higher than the previous week. And yeah, so gaining some momentum, slow and steady. I'm anticipating potentially that this weekly RSI will then line up and eventually touch this one. If that were to happen, then that's most likely when we reach $209. And then that's where it's going to be interesting to see if there's a big spike in volume. Volume is very important to get over that bear flag area. So like I said, if you can only get up to here, maybe you pull back a little bit, and then the more important thing would be to eventually um, create a higher low on the weekly chart. And then that will really be a positive sign. So you have the daily uptrend currently going, and for as long as that keeps going, then you'll have the weekly candle continue up, and then at some point, you'll run out of energy, and then you'll pull back, and then what we'll look for is confirming a weekly um, higher low. So we're just going up, but at some point we need to create space and then have a healthy pullback, hold whatever level that is, and then on the weekly chart, do the same thing as the daily chart. So right now you just have 2 positive weeks on the weekly chart. So as I'm saying, on the daily, you want to do that eventually on the weekly chart, where you have a low and then you form a high, a higher low, and then a higher high. So that'll take time. That'll all be dependent on how quickly this daily trend peters out, or how soon it comes to a point where it has some consolidation. So there's a little consolidation, not really little. The day before, I didn't even look at that. So on Thursday, Tesla closed at $200.45. So we basically closed right almost at the same level. So stalling a little bit right here, but I'm pretty confident, we should at least get up into the $210, $215 range. And then following the daily candles, seeing when do we hopefully create another higher low. That's the next thing, is to see the continuation of forming higher lows. Like I said, it's okay to pull back even at this point, as long as you don't break below that. And then, but you don't want to give too much back, because it'll make it too much harder to make a higher high. If you give back, let's say you go down to 190, then that will be much more work to create a higher high, because you're giving too much back. And so we'll see. So that's what's going on this week. Well, the week hasn't started, because today's Monday and there's no trading today because of President's Day. But anyway, the last point is, if we can proceed through this area here and get closer to a 50% retracement, then I would say the more likely is that you get up to the 200-day moving average, which is up here at 234 currently. And it's sort of straightening out. And so to me, that would be the logical next stop. If you can get past this 38.2 retracement, then you get up to the 200-day moving average. And I feel pretty good about that happening over time, that we reach up to here. And then after that, then we just trade and form an equilibrium. That's what I think is the more likely, because, we got pretty extreme from 265 all the way to 175. And moving me out of the way, you see, you got the daily RSI. At one point, it got down to 17. So as I always talk about, levels that eventually go in the opposite direction, at some point in time, I would say that we will get up into the mid 70s, potentially up to 80 again on the daily RSI levels. But that'll take time. But that was pretty extreme. We got down to 17 on the daily, and on the weekly chart, we got down to about 35, I think, 34. And pretty sure that that is the bottom, and we'll see where we go from there. So 200-day is the next level, right? And that would be getting up into that area of the 61.8% retracement. And I'm going to make another video on a different stock, which is Boeing. And if anybody's interested, take a look at that. Look for my Boeing video. I'm I'm very interested in Tesla. Now I own some for the first time ever. I was always waiting for a big pullback, and I missed that one where it went down to 100. I wasn't at the level that I am now as far as my my skills at day trading and swing trading and long term trades. But I feel much more confident now. And to me, Boeing is another one that I'm really, really interested in. I own a little bit right now, but check out that video if you want to see what I'm looking at there. So appreciate the views, and we'll talk to you in another couple days. We'll see what happens midweek here with the trading market, probably Thursday, since well, maybe the end of Wednesday, because that'll be 2 days of trading.